Share market rallied yesterday after the inflation numbers suggested the Reserve Bank will likely lift interest rates by 50 basis points next week. Joining me now is our business reporter, Edward Boyd. Ed, the relief rally is set to continue today too after the US Federal Reserve lifted interest rates overnight.
Yeah, widely expected. The US Fed lifted rates overnight by 75 basis points. US stocks shot up off the back of that decision, particularly the Nasdaq, which is tech stocks. They were up about 4% overnight. The S&P 500 was up almost 3%. So our market has kept rallying as well. So the ASX 200 up about 0.8% in early trade today. This is all off the back of those inflation numbers that came out yesterday, basically hinting that the Reserve Bank is likely to lift interest rates next week by 50 basis points instead of the potential supersized 75 basis point rate hike that may have come into effect if inflation was a lot higher than predicted. But inflation, the CPI index, came in roughly at the ballpark figure that economists were predicting, and that's tempered the outlook for interest rate hikes in Australia. We still know rates are going to be going up, probably going to be at about 2.85% by the end of this year. So we're going to see another rate hike next week, but investors are relieved about that, and shares are up today, including the tech sector, which is the best performer on the local market.
Yeah, maybe the headline was could have been worse. Ed, Australia's third largest iron ore miner, Fortescue Metals, it's just shipped a record amount of iron ore in the June quarter.
Yeah, record amount of iron ore has been shipped by Fortescue. Look, iron ore prices at the moment aren't as good as what they were last year, but you can see on the screen almost 50 million tonnes of iron ore shipped overseas in just 3 months. They sold it at $108 a tonne at a cost to the company of about $17 a tonne. And over the course of that year, they shipped about 190 million tonnes of iron ore. But they put out some guidance today as well, saying costs are going up. So it's going to cost them about $1 more per tonne to produce iron ore in this current financial year. And this is really a challenge that a lot of companies across Australia, particularly the mining sector, are facing at the moment. Inflation, rising input costs, the costs of shipping are increasing, wages are going up as well, and there are skills shortages. So all these things together are putting pressure on Australian businesses. We also saw Rio Tinto's results yesterday, where Rio Tinto's dividend has been cut in half due to basically pressures in the mining sector as well. So this is a challenge the whole sector is facing, and we'll get more of it in August when more of these companies keep reporting. Tom?
Yeah, it's not the $220 they got for it, but you can still turn a profit at over 100, that's for sure.
Absolutely.
Ed, thank you.